Okay, welcome to part dos of our two-part conversation with Lee of LG Investing discussing Arcimoto.
Can you go back to your actually numbers now? I did want to cover what is your actual price target
Sure.
for because we didn't cover the most important thing. We're all about making money here. I'm
What is
freelance
the stock
finance.
price? What is the stock price and the market cap?
How much is it like at the end of 2022?
So if they're
2,000
selling
units.
like 2,000 vehicles next year, I'm
Yeah, yeah,
expecting something like 37 million in revenue.
yeah.
Obviously, we can't use a price to earnings multiple because they will still lose money, but we could
Right.
use something like a price to sales multiple. So you
Okay.
mentioned that earlier.
Mhm.
Currently, that's like a ridiculous number in the 300s or so. I'm using 25.
I think it's at 100 right now. That's what I saw
Right,
last.
it's
So
massive.
25 is actually a lot better.
Yeah, it's
Okay.
coming down. So it's still insanely high, but not unusual for a ramping company, right? So I'm anywhere at a stock price around $17 and $1 billion market cap end of next year, maybe. As we know, the markets love to freak out and be irrational in the short term. It might deviate a lot from that. It might be at
Mhm.
40, I don't know.
I
But
do
that
want
would
to
be
cover
my
the chart for you after you go over your numbers because I want to see if you agree with my at least short-term
all right.
predictions. But this is actually great. I'm going to buy some shares Monday.
Right.
The one thing I want you to do, I don't know if you're willing to do this or even have an episode on your own channel. Can you include how much money they currently have on the balance sheet, how
Sure.
much they have to raise at some point? I don't know if you want to do all this work, but it'd be nice to see like, oh, how much money is actually left if they do what you're saying. If it's not enough, then we know that at that
How
point
much dilution
they
it's going
have
to
to
be.
dilute
Yeah.
us. We just know it. Like it becomes obvious, right?
Easy math. We can do it live. So they have 40 now, probably around 30 in the third quarter. That's this slot here, right? Deduct like 11 million or 10 million. So at the end of this year, there will be around maybe $20 million in cash left,
Hmm.
right? More or less. Maybe they raise a couple of shares here and there, like a little
Well,
capital.
yeah, assuming right, assuming
Assume
they
20.
used the 9 million or so per quarter.
Yeah.
That's what we're assuming. Okay.
Yeah. So assume 20. I
Mhm.
assume that over next year, they will need something like 85 from their operations. And again, add to that, that's not cash flow here. Add to that the CapEx, like the factory build out. So it will be a lot more, right?
So you're saying they need 100 and let's say 20 million minimum.
Yeah. And they have 20 on hand. Obviously, liquidity can't go to zero. So let's call it, I don't know, 140, 150. Add back the part from the ATVM loan. Who knows how much that will be, like 50 million or so? I don't know.
What's the range that they could qualify for, like the minimum and the maximum?
In dollars, I don't know. It's a percentage of total capex that's eligible for the loan. And we don't know how much the build out of the new factory will cost. Like, I'm waiting since last year for this number or some
Right,
hints
right.
in
Well,
which range we are at. I don't know, really.
will there when
So
they report earnings this week, I'm just saying maybe we do a follow-up after they have their earnings and we have the actual numbers.
Sure, if they give us any hint in this regard, it will be great. Like we're actually waiting for an update of the like Monroe collab. I think Mark mentioned that he will give us an update in August. Well, we haven't heard anything ever since. So I think as they are done with the collab with Monroe and have kind of the final production design, final like assembly design, they will know what the capex is and maybe they will give us some hints what they expect in terms of costs, how much it will cost them to build out a new factory, right?
so the one thing when you had your $17 price target 2023, this is 2023. Am I looking at that? The 85
Yep.
million?
Yep.
Uh, so the
So
one thing you're not considering is this raise. It looks like so it shouldn't be $17. If they double their shares, wouldn't we be back at like $8, $9?
yeah, I would expect a lot of dilution. Like I would expect them to raise at least 100 million next year.
I mean,
So at a
they're only at
$50,
372 right now. They're at
yeah,
372 million right now, so that's a lot of money.
yeah.
The reason I bring this up is because look, at the end of the day, we're investing in this company. Is now the opportune time to invest? Or honestly, I would tell most people who aren't already in it at $2 like we were, honestly, maybe you should just wait until quarter 3 of next year and decide then if they've done some of these things we are talking about that, oh, they are growing. This is after that dilution is over. They're still going to be in at a good price. Let's face it. This is not going to go 10x in the next year. It's not going to happen. We're out of 2020 already. It's done, right?
Yeah.
2021, 2022,
Right.
Arcimoto is going to have to show some reality here. And it looks like by even your numbers, even though they're kind of bullish, I feel in terms of selling vehicles, the dilution will bring the share price right back down to like 8, 9, $10.
Yeah, obviously, if you're very risk averse, you should wait until they hit profitability. But at this
You don't have
point,
to wait that long, right?
yeah,
But
you're
if
going
you're
to miss the
really,
whole thing.
if
You're
you're
going to miss
really
the whole
risk
thing.
averse and you want to bet on like a sure thing, you'll be paying that premium because the stock will
Yeah.
already.
Right.
I just mean next year, Q4, the stock is still probably going to trade between 10 and $20. Let's face it, right?
Yeah, I could see like two scenarios here. Like they get the ATVM loan and the short squeeze kicks in. Like we haven't talked about
Right.
the
We
short
haven't
interest.
talked about that. Yes.
So if the short squeeze kicks in, everything changes because they can raise then capital at the stock price at around, I don't know, $40-$50 or so. And everything from this like dilution argument changes. Like
Their stock price was $36 selling no vehicles. So there is money that will come into this. And granted,
Yeah.
some of it could have been the short interest, but still, if this has two or one or two good catalysts, the money
Yeah.
is going to come in.
I agree with you that there's probably a short squeeze that's going to happen sometime, and we're probably going to experience it. But my goal is to probably sell half of my position at $50 just because we know it's a short squeeze. We know what's happening. It's not that I don't believe in you. It's that if it runs to $50 and then they're diluting another 100 million,
All right.
like it's obvious what is going to happen after the short squeeze.
Right.
It's going back to under 20 or whatever,
Right.
even around
Well,
20.
they
but-
take more than 100. If they're taking 100 million when it's at 372 million, they're taking more than 100 if it's $50.
So as investors, you're right. Me and you might actually benefit in the next 6 months if something like this occurs. But in terms of the valuation, do you agree that it'll just drop right back down to what we're discussing here?
It depends. Like the revenue certainly can justify like a $50 stock price next year. So I would also take definitely some profits, lock in some profits if it hits like $40 or $50 or so. Certainly, yeah. Point here I'm trying to make is, okay, that's scenario one. They get the loan. Maybe that's the trigger for the short squeeze, or they don't get the loan, or a lot less that they could have got, and the stock tanks and things go south from there. So that's obviously a risk. And at this price point, at under $10 per share, I'm willing to take that risk to maybe add to my position. Again, it's like low single digits of the overall portfolio. I wouldn't encourage anybody to load up shares and make it like all the life savings or so. That's definitely not.
Right.
So maybe add a little bit to make it 2% of the portfolio, something like that, maybe 3%.
So you're willing to double your position. You're willing to double your position though
From
now
1 to
at 10
2%.
bucks.
Right. This is a question for both of you. Okay. So he mentioned on the call that the reason why they're in this situation with the shares is that they didn't ask for the correct allocation of shares when they IPO'd. And he said that was a function of me being a new CEO. I made a mistake. Where else could that happen?
I would agree that like they should have raised a lot more cash last February when the stock was up. In their defense, they issued shares at an average of around, I think it was like $22. Once at 25 and at 17, I think, at an average of 22, something like that. So they did raise more capital, but not enough. And not
it was small, I remember. Yeah.
Yeah. But I think in terms of mistakes that I could make going forward, I think the most issues I have currently is their plan for autonomy. I'm not that bullish on that case. Just seeing, like you're following Tesla as well, just seeing how hard it is to solve just some part of the autonomy. I think it was easier for them to turn on the lane changes on highways, and they work like 1 or 2 years on the smart summon feature just to get the car across the parking lot. I think either you solve full autonomy or you don't. And if you don't,
he was saying, if you remember, he's not trying to solve full autonomy.
Yeah.
He wants an off-the-shelf thing that gets you 90% of the way there, and then an operator maybe sitting somewhere detects a problem and takes you the last mile. I'm not saying he's right. I'm just saying that's what he said.
Zipcar is a service where you basically pay a monthly fee. It's like $11 and you get like a card, and then they drop these zip cars all over the city. It's kind of like the little birds, the little Lyft birds. It's a car that you can rent for the day and you just pay per the hour. The problem with that is, and I've used it a couple times, like when I went to see you and all I did was look for the nearest center. It was like 4 blocks away. I walked there, paid the thing. There was a car. I got in the car and just went. And the good thing about it is when you're done with it, you can sort of leave it anywhere because someone else will come get it. What Mark is going after is that market. He's not going after the full self-driving. I think his exact words were, a lot of times you're paying a driver to drive another driver. Like a person needs a vehicle more than they need to be driven around. So I'm just going to get the vehicle to you, then you're going to get in and drive it. So it's not the full self-driving in the sense of Tesla, because it's not going to take you to your destination. It's just to get the vehicle to you, and then after that you're in control. I don't know if that clarifies, if that changes anything. That's what he's saying he wants to solve.
Sure. That's just what I'm not like fully buying. Like even if he has an operator that could like step in case the vehicle is stuck, like that's so inefficient from business perspective. I don't want that they get distracted from their core business, like get the amp up and running, get to profitability, and from there, then you can add new features or so. But what I'm a little bit worried about in this case is that they get a little bit distracted. But I might be wrong. They might succeed. I'm also not discounting that in my spreadsheet or anything. Like, I'm just assuming that there's no autonomy component.
Right.
Oh,
And
interesting.
if
So
they
none of
add
that
it,
doesn't-
yeah, that's 2022,
Yeah.
the $17. Then in 2023, for the full year, we would have these roughly 15,000 units, 200 mil in revenue, 150 mil negative net income. So I'm just basing my price target again on a price to sales multiple of 10, down from 25 the year before. We're at 30 on a fully diluted basis. So currently we're at like 37 million shares. At the end of this year, I assume 40, then 55, and now in 2023, we're at 70 million shares. So I'm already factoring this dilution, right?
A little slower, I feel, right? Because we might be at 60 next year.
All right. Yeah.
Right.
I have 55 next year, but whatever, we don't know.
60, right? We don't know. Okay.
Yeah. It will matter like how much money they'll get from the ATVM.
Right.
Like,
Okay.
it's going to determine the dilution, I believe.
No, that's fair.
And then 2024, again, we're on an exponential ramp. So we don't know if this is accurate or it will be pushed out another year or so. This is just a framework. Okay, if they hit nearly 40,000 units, 500 million in sales, positive gross margin, slight negative net income margin. We still can't use a price to earnings multiple, but still a price to sales at around 10 still. Okay. You could drop that arguably. 80 million shares fully diluted. They don't need that much additional money, right? We're at 69. Oh, 70.
That's a good number, right?
And that's
69, 40, 42 or something.
69.420.
Yeah.
But that's what year is that?
2024, end of 2024.
2024. Okay, so then that's essentially 1 year after the amp is really up and running, even before they hit peak capacity. You're thinking that. That's really bullish. A year to go from zero to ramp up to that and go to 70.
Well, I think this is now 2 years. This is the end of 2024.
But it's only a year after the ramp, because we're kind of writing off next year as like that's just building up and ramping up. So you're saying like 1 year, that's pretty bullish.
Yeah, so they have like 2023 when they really start, and then 2024. So 2 full years with the new factory. Though at the beginning, well, it doesn't add a lot of units, I believe. But yeah, really towards the end of 2023 and well into 2024, I think things will add up. And just roughly speaking, they're a $500 million company now. We're talking about a $5 billion company maybe in 3 years from now, 2 years, 2.5 years, with $500 million.
And that's counting the 70 million shares, right?
Yeah, fully diluted, yeah.
So that's a rough framework. Of course, they could be late with hitting these numbers, and then it will be 2025. Who cares? That's a 10-bagger, right?
My only thing in all of this is they have to survive until 2023, something, because in this next year and a half, oh my God, there's so many things that can go wrong. There's so many. This is why I would tell any new investors, just hold on, wait. You don't have to put all your money in. You can DCA over a year, basically, right? Sure. That's what I feel at the end of the day. Well, this is good to know. This is great information. In fact, I don't even have to share my counterpoints in terms of, because I have way worse numbers and everyone's going to hate me.
Fundamentally, what is Arcimoto? Are they a product company or are they a technology company?
What would you say?
It's very quiet. I think they want to be, if I'm going to answer, he's thinking about it. They want to be a tech company, but right now they're just a product company.
Yeah,
so
I would agree.
Yeah.
I don't know like how much of a lead they have in battery tech. I think they buy from.
I mean, it's a 19 kilowatt hour battery. It's not.
No, but everything they buy from someone else. But don't get me wrong, as you pointed out, everyone keeps ignoring. By the way, my history is computer engineering.
Okay.
It is very difficult to build anything. And just as Elon says, at scale, it's difficult to build anything. Okay, forget about at scale. Scale just adds this other complexity of now you need 1 million of these things. So if Arcimoto is able to do in 2023 anything, like you said, 5,000, 4,000, doesn't matter. If they prove they can do that, I believe they are going to 5 billion and 10 billion right after that happens, because they have proven the model. I'm just talking about the next year and a half where they haven't proven anything. That's why as an investor, I feel like this is very, very speculative still. And you should have bought it at $2 and now buying it at 10 is not a great deal.
Well, if you bought it at $2, you'll be basically in profit all this time during the choppiness.
Even if it goes back to 2, at least you're like, okay, I didn't lose anything.
Watching it.
But people are going to be, they're not going to like what happens in the next couple of months. That's what I think is going to happen. And then we're going to lose a lot of people. So even though, let's say we believe, and it should be at $10, I think it should be at $10. It's a small company that's showing its growth, but I think it's going to get hammered. So I'll go to a chart too, maybe we should go to the chart now.
Sure.
But the problem now is that Wall Street is not really invested in Arcimoto. I forgot the institutional numbers, but it's very small. The retail investor is pretty much the whole investor in this whole company. The problem is that the retail investor is very fickle. As soon as anything happens, like the chart breaks, it breaks down, there's some sell-off, a lot of people will just flood out, even if they shouldn't, even if they're losing money and they should just wait the year. I feel that's why temporarily, I'm not talking about, let's say they succeed, and I think they will eventually. Temporarily, I think the stock price can get really hammered. I mean, to the point where a lot of people lose faith, a lot of people sell out. Look, obviously these lines are arbitrary, and I'm not a day trader or anything. I don't know if you've seen us, but I do like to look at the charts for times to buy. I feel like they were in this trend, even though they broke out up and they went all to 36. If you look at the history, it's sort of keeping between this purple line, this orange line. And so this is what's making me nervous, because if you look over here, this is it's a bad situation. I'm going to zoom into it. And it looks like it's going underneath $10. And that means there's really no support until we hit around 8 to 7. I would say 90% certainty that this is going probably to around $8. Just because if it can't hold this, and look, I could be wrong if this rebounds in the next couple of days and we get back into this nice channel, even if we're riding it slowly. But the people looking at these charts, even if they draw these, I mean, it's not complicated. They draw a line, and if it breaks it, I feel like we're going to be dropping to 8 or 7. That's why I was asking you, why would you pay $10? Unless you're DCAing and you get it, it'll fall to 8. Maybe I get that. Sometimes I do that too, but now it seems a little bit risky. That's what I would say, to buy some more until we see what happens here. All this trading that happened around $8. So this is why I feel it's a little bit risky right now, and I wouldn't recommend people buy it in terms of thinking it's going up. If you know you're DCAing and you know you're buying it on the way down, that's fine. Buy it all day long, because at $10, if we think it's going to $60, it's no brainer. Obviously, you just have to wait for 3-4 years, right? 3 years.
Yeah, seems fair. I certainly would have waited until the third quarter, like SEC filing is on and the webinar and what they say. But if it drops more towards the $9 or so, what you're saying makes sense that we should expect it to drop more to 7 to 8.
So you're saying under 9 is when you really feel like, oh, it's going to 8 or 7.
Yeah, definitely. So I'm not watching curves that closely and the sticks.
Right.
But what you're saying definitely makes sense. So I would have waited anyway until after the third quarter webinar, but based on what you're saying, we should wait a little bit longer, maybe.
We're all holding shares. I think we both have points where we want it to succeed. We have skepticism, but we also have some hope, right? Overall, would you say on a scale of 1 to 100, 100 being completely bullish and 0 being completely bearish, like where do you fall the next 12 months?
As of right now, if Tesla is 100,
everything's based off of Tesla.
Right.
Arcimoto probably is around 30, 35, probably. So lower would make any sense to invest in a company that you're less bullish on, but not because you don't wish them well or anything, just because the huge amount of uncertainty, pre-revenue, startup, huge risks. So that's why maybe 35. If they get the ATVM loan, it would put it at maybe 50. That. This is as you said, a make or break moment, right?
Honestly, after the dilution and after the ATM loan is the better time to buy this.
Where are you, Vitaly? Like right now, right now.
I've sold everything just now.
I'm about the same. I'm like 30, 35, to get to that 50 where you can say I'm not really bullish. Where are you now? Especially after the research you did the last couple of days.
Yeah. I did all this research, by the way. Arcimoto, actually, in terms of that feeling, it's probably not as high as Tesla at 100. That feeling though is like around 70, like the feeling. But the actual investor side of me is like, this is probably 75% risky now, as opposed to like 70% possible to explode and and grow. So I agree with you guys. It's somewhere around the 20-30% in terms of my belief this year and a half. But as soon as that year and a half is cleared, don't get me wrong, I'm basically 100%. I think they have to just get over this hurdle of getting this amp up. And even if they don't pump out all these vehicles that you have, I actually have way worse numbers. I don't know if this will be an episode, but let me show you them. Way worse. It's going to look like I'm a bear. It's rough. It's 20,000 per vehicle. Current shares at 37 million. So if I go through, this is like the bull case. I'm even assuming a new factory 2025, by the way. So this case is like the best case scenario, which is selling 53,000 units. And even maybe that's too bullish, honestly, who knows? But let's go over 2021. They're at 425 units, right? Ramps 0. Tell me when you don't agree, obviously. And you can next year, 2022. I assume at the end of the year, they're only going to pump out maybe 250 vehicles from this, maybe 0 in the new facility, the ramp. So you had, how much did you have? You had several thousand, right? 2,500?
I think so, yeah.
I have 781. I mean, obviously, give or take, maybe it's 1,000. I don't know. Maybe it's 500. And to your point, does it really matter if that's not really there? 2023, I have, once again, their original facility is still increasing a little bit, 25% a year. That's not much. This one is scaling, but I only have 2,500 vehicles that 2023. Now, that could be really bearish of me, but I don't know, just going through Elon's whole thing of how he ramped and he had way more money. And now looking at this tiny company that doesn't have as much money and the dilution that's coming in all this just to get it to scale, even if they have the parts and the machines, they might just have a problem getting it all out the door. That's what I think. It's possible. They have 3,000 vehicles 2023. They double their production in that facility. And then they go to 10,000 2025. I assume this 50,000 number that they keep talking about is not actually
2030, maybe. Yeah.
Is not actually by 2025. That's what I think. But I could be super bearish where this is maybe 15,000. You know, I'm not saying that's not possible. I just don't think they're going to go hit the $50,000 vehicles as fast as they want or as fast as we want. This is year one. Let's look at year one, 2021. Obviously, we know this is a 9 million in revenue. What I get here is that they're worth currently at a 10 price to sales. I'm not using the 100. If I was to use something reasonable, 10, 20, or even 60, and I would say they should be around here right now. They should be $5. Even if we're giving them a higher multiple, $5 is probably what's going to be hit when Mark comes out with his numbers Q3 and they're not great. And then Q4 comes out and it's choppy again. I think it's going to around $5. And a worst case, does it mean I'm not buying it at 7? I'm buying it at 7 because I don't know if it's going to actually hit $5. Like, to someone who's not doing all this analysis, I'm trying to be in their mindset. Someone trading this, someone looking at the charts, they're like, okay, this is worth probably $5. I'm going to short it till at least $5, if not 0, right?
All they care about is how many units did you sell and how much profit did you make.
No, that's a good point. They're looking at delivery and production numbers, while they should be looking at CapEx budget and timeline of the factory build out, right?
2022, 16 million here in terms of revenue. 2023 is, I'm assuming actually, this is where it changes if they survive. So now, once again, I'm now between $17, $33. I'm actually leaning towards $33 in 2023, end of it, because I'm figuring we'll give them a higher price to sales multiple. I think you had 25. So we're actually not that far off. I think year one is where we are really in disagreement. 2023, I'm assuming $33 because we're going to give them a price of sales of 20, right? And is that too much? It still might be too much, but that's why I put here possible like 17. But all of a sudden, this stock is worth buying, right? If they survive 2022. 2024, I figure they're probably a price of sales of 10, so $32 around. And 2025, I think it's a $90 stock. If they have survived all this time, and even if they've made 15,000 vehicles by 2025, we still have a $90 stock, which is still almost a 10x. Lee, do you agree with anything I just showed you?
The real question is, do they survive the next 1 or 2 years? And if they do, how quickly are they able to ramp up?
Right.
That's the real question.
So after they survive, whether me and you are off for a year or two really doesn't matter at that point.
Yeah, it's just a question of how quickly it will happen. Like just with Tesla, they will miss probably a couple of milestones by a quarter or two. If they survive, this doesn't matter to us, right? And then the question really is in your model, right? Okay, if they survive, okay, there's a second, third, fourth factory, maybe in Asia, in India, who knows? In like huge three-wheel markets, if they are able to drive down costs, maybe enter with the platform 2 there. We haven't really talked about the platform 2 in this interview, right? So this obviously would be huge. So I could see the possibility, though I wouldn't like base my investment decisions on that. That's just all upside. all a free call option. If they survive and succeed, boom, you have it with it, right? One thing that we both don't have is DCF. So we don't take into consideration the interest rates and inflation, which are a little bit concerning right now.
Yes.
So as the longer we look into the future, the more this will affect our value today that we get. And obviously in a high interest, high inflation type of environment, these type of stocks that are pre-revenue are literally taking a bigger hit. So to your point, a $7 to $5 stock price in the next couple of quarters, yeah, could be.
Well, there you go. Everyone's upset now. We're all sad.
One advantage that I think that they have with the size of their factories and what they want to do with it, say over even a company like Tesla. Remember how he said this is going to be an area where we have the Arcimoto Park? So I think what he's trying to do is make the factory like a destination. So the party that they did at Giga Berlin, where they had like the Ferris wheel and stuff. If he succeeds at this, and Arcimoto becomes almost like a park, like an amusement park in the town that they put them in. You could partner, you could have food there. You also have people have rentals, short-term rentals will have a playground. They could have a racetrack for it, open them up to sales because they're spending a ton on advertising, getting it. Like, I'd love to know what the cost of their customer acquisition is. How much are they spending, whether it's on social media or how many times does a customer rent one before they buy one?
We don't know the rental numbers yet. And I don't know if quarter 3, Mark is going to share how much they're actually making from some of these 4 places of rental. So I would like to see what that might change a lot of these things. Like if they're actually renting, their rental business is increasing, that becomes more bullish even. So
then one vehicle, you start to see it as like, what's the ROI on that one vehicle?
Right.
They have some interesting things that they can do that even a company like Tesla wouldn't be able to do. Should I kill this guy? Is he going to survive?
We're actually mostly bulls. Like
we all have money in this thing. I mean, we all have money, but it's important to be critical, right? Because
we don't want to have a puff piece like every other channel has, basically, that this is going to the moon.
Going to 100, yeah.
Right. Don't fall in love with your stocks, right?
No, definitely don't.
When there's some things that are running that smoothly, like
And
acknowledge if some things are going south, right?
Has anything that we've said
changed your mind?
Has it made you more bullish, more bearish as like we talk, or?
No, I think fair point with the charts that maybe now is not the perfect time to buy a lot of shares except of DCA. But other than that, I think we could agree that the ATVM loan is make or break moment. If they survive, if they get to cash, maybe the short squeeze could kick in. They can raise a ton more capital with less dilution, and they probably will survive. So I think we all agree on their potential. So if they survive this 1 or 2 years that are ahead of us, I think we agree that they probably survive and will do just fine. So the question really is, okay, will they survive the next 1 or 2 years?
It sounds like if we were an analyst, this would be a hold rating and maybe DCA as it goes down, but it's a hold rating as you wait for these big milestones, whether it be earnings and then whether or not they get the loan.
Yeah, or at least buy carefully.
Everyone who goes all in, I think the time for that is done. Like I said, 2020 is over. So people should be careful, but honestly, DCAing is not a bad strategy for FUV. It's going to be interesting though. Well, we appreciate having you on. I don't know if you have to go anywhere. Obviously it's late where you are.
Thanks so much for the time. It was really cool having this sort of 3-way conversation.
Thanks also for my part. Thanks for having me on the channel. Really appreciate it. And it was a lot of fun. I think it's always valuable for the viewers if they get different opinions, different points of views, kind of to fight the confirmation bias. And yeah, let's repeat that in a couple of weeks, maybe. Yeah.
All right. Awesome. I appreciate having you on.
Thanks again for watching. If you enjoyed this conversation, please hit like and subscribe and hit the bell. We have an up close and personal interview coming up with Brent Wilson, the CEO of NeoVolta. That's coming soon and you don't want to miss that. So hit like, hit subscribe, and hit the little bell. Thanks again and see you soon.